Hey everybody, it's Daniel here from IFRS. Hope you're all doing well. So we got to talk about inflation, CPI. We got the US CPI print not just too long ago. The number came in line, and so not much of a change. The headline number is slightly higher, 0.1%, but not a big deal. But I'm going to go over today the CPI number, the inflation numbers, what it means, right? Before everyone on CNBC, the talking heads come out telling some narrative. Obviously, I can hear it already, right? The realtors, the mortgage agents, the CIOs, the market strategists, all out there telling you how this number is fantastic. Go out, buy your houses, get those mortgages, buy those assets. It's all gonna go to the moon from here because look, inflation's not going up. It is all a-okay. But is it really? And what does this mean? What does the data mean? Let's break down also the components of it and what this means for the Federal Reserve, the US Federal Reserve, when it comes to rates. Although the markets are not pricing in any more rate hikes. It's completely out of the question. The markets are now thinking about, okay, when are the rate cuts? And obviously, that's when you get all the talking heads coming out saying, look, rate cuts are here. Rate cuts are here. This is all a good sign. These things mean, that things are going to go up again and houses prices are going to go up again. So don't worry about all of this. There's no recession, nothing. Don't worry. Just close your eyes and buy. But today we'll break down what this all means, what's the truth behind the inflation numbers, and let's get started. So here the headline number, month over month, 0.1%, higher than expected, tiny bit there. And, it's been shrugged off. Market doesn't really care about that. The core number, which is really, really important, that came in line, so no change there. But here's a number that no one, the talking heads out there, don't even talk about. And here, when you look at the central bank and you study the Fed and what they're looking at, they look at a number called the super core number, which basically is a number that strips out the CPI number, the core CPI number completely, right? And they basically take out the shelter component, and what's left is a bunch of services, which I think is kind of a useless number. But hey, the Fed looks at it, so we got to look at it as well, right? And the Fed's making also their decisions based on this super core number. Now, the super core number comes out at 0.44%, so this is higher than the previous number of 0.22%. So this number came in slightly higher, telling, okay, things kind of re-accelerated a bit, which tells you one thing, that if this is the Fed's favorite number and the number went slightly higher, then how are we going to get rate cuts anytime soon? Even though, yeah, sure, we're going to get rate cuts, but how is this, dovish or good for the economy when it comes to especially rate cuts, right? So if looking at the super core number, this basically tells you, especially with the Fed meeting tomorrow, that there shouldn't be any crazy dovishness. There shouldn't be any feeling that rate cuts need to come anytime soon, because just look, the super core number that takes out sticky components, that takes out shelter out of the equation and looking at services, actually went up. So how is that even a good thing there? Even though everyone out there is going to tell you, look, inflation's in line, no change, everything's fine, we come down from the peak. Sure, we have, but there's still stickiness lingering in the economy, which does not give you a reason to start talking about rate cuts here, because the job's not done, especially if you got a component, a super core component, that takes your typical CPI report, strips it apart, leaves useless numbers in there, and tells you that, hey, it's actually still higher, and oops, it's kind of re-accelerating here. Then how does this give the Fed any runway to start talking about rate cuts? So I expect tomorrow the Fed to not even, say that we're thinking about rate cuts and push and throw cold water on that narrative. Now, what the bond market does, what the markets do, they will price their own thinking. They could call the Fed's bluff the Fed has been wrong many times also. Okay, let's I know I'm not arguing that they're right. The Fed has been wrong, and likely again they're going to be wrong. Just don't forget, in September, a couple months back, the Fed penciled in 2 rate hikes. And the markets were pricing in January we're also going to get a rate hike. Completely flipped the narrative. Now we're talking about rate cuts. So you see how wrong even, not the Fed, but even the markets get things quite wrong quite quickly, right? And the shift happens very quickly. So it'll be interesting tomorrow what we see and how things come out in terms of the Fed, in terms of what we have to see in terms of rate hikes and rate cuts, and how that gets pushed out further. Especially as we get more data. But the markets are still pricing in a 50% or a little bit less than 50% chance of some sort of rate cut to start in March. So there's still some of that dovishness there. So going back to the CPI report, the super core number came in slightly higher. That's not a good thing. You had the equity markets, bond markets initially rally on an inline number and then sold off completely. That's the first knee-jerk reaction. And right now, as I look at the markets here at around 9:30, we're seeing still some selling pressure. Right, one is the super core number. Second is we had a rally in the bond market, stock market yesterday, basically front running the CPI number as well. So obviously you could see some sort of selling pressure from both two combined, plus the FOMC that we have tomorrow, right? So again, going back to the CPI number, keep getting deviated. The super core number slightly higher. That's not a good thing. The Fed watches that, takes out all the major components from the report, and the fact that a very a report that's supposed to make things look good actually is not looking good, right? And you could see. I'll mute that there. You could see that that doesn't push the case for the Fed to start talking about rate cuts right away. And again, like I said, things can change very, very fast, very, very quickly. Now let's get into the actual CPI report from on the BLS website. So just covering 2 paragraphs here real quick. It says the index for shelter continued to rise in November, offsetting the decline in the gasoline index. So shelter went up a bit, and basically offsetting those gains, offsetting the decline that we saw in gasoline. And then it says here the food index also increased to 0.2% in November after rising 0.3% in October. The index for food at home also increased. So already here in this report, in the regular report, it's telling you food has increased, food at home has increased, meaning your groceries and whatnot, and shelter, right? Which is, important items of your life, of everybody's life, is food, shelter, water, right? So these things are higher up there, and they've increased. And okay, gasoline has come down, but these gains are offsetting the decline in gasoline. It also mentions here indexes which increased in November also include rent, owner's equivalent rent, medical care, motor vehicle insurance, indexes for apparel, household furnishing, operations, communication, recreation were among those that decreased over the month. So the ones that increased were rent, owner's equivalent rent, which is again very important. Shelter, right? Rent. That's sticking around, and that's keeping inflation where it is in line. So again, telling you the same narrative what I started off with. Inflation battle hasn't been won, and you can expect you expect Powell, U.S. Fed, to come out tomorrow and say we're not done with inflation. We still have a long way to go. 2% inflation is what we want to target, right? So we got shelter component moving up there. We see also a few highlights from the report. Food up as well. Gasoline came down. If we look at new vehicles came down a bit. Used cars and trucks actually went up. Apparel came down. And everything else I already talked about. Transportation services actually also went up as well. So overall, what does the report tell us, right? Again, super core number reaccelerated. the CPI number overall came in line, but when you break down the number, the most important things that are affecting consumers, shelter, food, this has also gone up. When you see especially shelter still staying there, the stickiness of it, right, staying there, that's not enough to bring the Fed to come and say we need rate cuts. Right now, you got to start thinking what's going to cause the Fed to come in and do rate cuts, right? Not from a report like that's, in line. And again, I can hear all the people coming out and saying, the TikTokers out there saying that, hey, look, this report came in line. That means rate cuts are going to come. No, actually, rate cuts are going to come once things get worse off, right? And especially this report's not looking like things, and the economy is not looking like things are getting worse off just yet, right? Until really things start to screw up. And as we see in the track record of the Fed has always been late to the party, I feel the Fed will also be late to the party when it comes to rate cuts. And when rate cuts happen, it's not because things are getting better, because things are getting worse. And that would seep into the CPI inflation report, because things are getting worse, because the demand crunch is worsening off. Thus, you're getting the Fed to react with rate cuts, because okay, yeah, now we see inflation is going to really drop. We might even get deflation because of where demand is going, where this recession is leading to. And actually now this soft landing that everyone's talking about is looking like a hard landing. And NASDAQ's about 2% away from all-time highs too. So, it's very interesting how things have progressed, and you could see things change quite a bit in 2024, which we'll talk about later in the later videos, and which we'll talk about in 2024 as well. So if you like content like this, you like videos like this, you like to understand and break down what the actual numbers are coming out from reports like this, like the inflation report, then subscribe, hit the like button, share this video with your friends and family, and comment. Let me know what you guys think about this whole CPI report with rates, where it's heading towards and whatnot. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.